Good evening, all. Ira Epstein with your metal market wrap-up, and this wrap-up is for the evening of Tuesday. And here we are on the 25th of July, 2023, just after 5:40 p.m. Central Time. So obviously tomorrow, all eyes are going to go to one area. They're going to go to the Fed FOMC, that is, statement at 1 o'clock p.m. Central Time, then the press conference. The market widely expects that the Fed will say that it's going 25 basis points. And then the question is, what will the Fed say in the press conference? I think that the Fed chair will still open the door for another 25 points after that, but not be committed. If he's smart, he's opened the door. Yes, we're not at our goal, so you've got to be looking at it. But if the data were to come in a certain way, blah, 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 that would be the smart thing. What he does is always beyond me. We will find out. But remember, after this, we get an open window for almost 8-9 weeks before the next meeting. So we're going to be able to see CPI numbers, more jobs data. There's an awful lot. And that's why I say the smart thing that I would think is you make sure that door is open. You don't close it. Don't give the market any reason to close it. You want to be data dependent. I think that does the job. Now, I don't know what you make out of tonight's break because, going into the report, it's been a one-sided market. We've had a melt-up in the stock markets where it goes every single day higher and higher, but we'll talk about that in the financial section. In the metal market section, you keep holding this $2,000 level. The bonds and the notes are still sitting at the inversion of 100 or thereabouts. They're very close to it, the 210s. So you sit and you look at this and you go, okay, we still have the inflation. And as long as that's the story, and as long as the economy's not falling apart, that's very important. And as long as jobs stay as tight as they are, I think inflation doesn't go away as quick as people think. Now you see broker after broker throwing in the towel now, saying, okay, we're going to not have a bad earnings season. Well, you're seeing that. You're not getting a bad earnings season. I'm watching what's coming out. There are some companies getting hurt. Take a look tonight. You will see the different ones that are getting it. Even Microsoft at first gave back something tonight, but we'll talk about that later. When we take a look at the gold market, it's done exactly as I was saying it would. It's come up to the resistance point of the 18-week average. We started talking about this back here, and I said on a bounce, the real test for gold, if it's going to be bullish, it's got to be able to get up and over 1971.30 and close over that number on a weekly basis and prove it's not just a flash in the pan and fall back under it right away. You're $5 from there, and tomorrow's Wednesday. When you take a look at what the gold market's been doing here, this is the pullback that you've had. You had this big outside day down. Now, for those of you that don't study outside days the way I do, and I think they're very important, that was the end, not a continuation pattern. That was the end of this rally is what it signaled, and it did work. It broke first, made the higher high, lower low under the previous day, broke through a swing line, and you had a pullback from there. So from that run up to 2028, you fell back to 80? Is that 1990.50? I want to take that back. 1990.50. So you had a $38 break. And now the market has to figure out what next. It does that by saying, where am I going to fight a battle? The current battle is being fought between, in moving averages at least, the 100-day average in green and the 18-day average of closes. I love the 18-day average. I use that more than the 20, the 21. I know what different traders do, but I have found that that's really a neat average to use. And I always look to see where Bollinger Bands are, especially if they intersect with a key moving average, which they did here. The first rally up to that was a natural area that many chart analysts would say, we're at a long-term moving average, we're at the Bollinger Band, you don't stay over the band more than 5% of the time or under it, that's a zone of resistance, and it proved to be the case. The next time you visit it, it's also that, but you've weakened it. It's like anything else. You knock down a wall, you put in some mortar. Now you could put in and create a wall that was stronger than before, or you do patchwork and it's not quite as strong. We'll find that if the market can get back up there. When we take a look at what the slow stochastics have done, in the slow stochastic study, I'd like to back off with you here and go back a few days. So let's go back to last week when we had the market right about here. Okay, so now you're running the 80s, both numbers. You keep coming. You get to the point where you lose it right here. When that occurs, you often make a run to the closest main moving average of a market. The word is often. Will it do it? I don't know. But that would put the market in line to challenge the 18-day average of closes. I don't think you'd argue that you got pretty darn close to doing it. Is that close enough? That's going to be the big question. Often the market goes right down to the number. Now what's going to happen is that number, as each day goes by, is going to climb up a little bit. So you could fall there and give up a little something. But for the idea that when you lose the reading before the market goes and makes a new high, it'll make a hard run and often hit that 18-day average, I think that occurred. I've now moved into looking at the gold ratio and it's the gold-silver ratio, by looking at August gold versus Sep silver. I told you I was going to do this, and we've now done it. As long as you stay under the red line, the 18-day average of closes, silver acts stronger than gold. When we look at Sep silver, here too you lost the embedded reading. Will the market make it to the 18-day average of closes? That's the big bet. This is not close enough, in my opinion, to say it has succeeded in doing that. It's got to get closer than that. Will it do it? I don't know. What you don't want to do is clear the outside day downs high. If that happens, I'd call it a failure of the theory. In the copper market, this is where copper should have a lot of resistance. The first challenge of a Bollinger Band, the market is not, I'll repeat it and spell it, N-O-T, not paying a lot of attention to either the 100 in green or the 200-day average of closes. It's caught between the Bollinger Band, the 18, back and forth. That seems to be what the market's really looking at. What's the trend up? Why did copper take off like this? Because the Politburo on Monday from China said they're going to do something about the property market. Now, today you saw JP Morgan come out and say that statement says nothing. They held a neutral state part. Goldman said they take that to mean that there's going to be a pizzazz and something big's going to happen, and copper took off on it, and Goldman actually won the day there in terms of one-day reaction to it. Do I put any credence on one day or so? I think it's too difficult to do, so the answer is no. I'm going to need help from my IT department if they can remove that just popped up. It's behind my jacket. Thank you. So when I stepped back over here and I looked at the market and we were coming up, you could see that the market put on today 6 cents a gain. That's a sell-off. It was up 9 cents. So it gave up quite a bit right there. When we look at the platinum market, we had gotten up to this area where the market was fighting a battle, and you could see as it's going back and forth here, void of a trend, but trying to stay on a bullish bias. I don't see anything in that market at all. And in the dollar index, this is where I think the dollar is going to try to fail and set up a new downtrend before all is said and done. This was the short covering rally. This is exactly what I teach in my course, by the way. Lost the embedded reading, should go to the 18-day average. So classic working of the case. Now the question is, what's the next trend? I don't see the dollar gaining on a lot of foreign currencies, so that's why I say that. Now, one of the big things that I want you to consider are all the different things that we offer you. On our website at iraepstein.com under free offers, and by the way, you can move your cursor up here at any point. There'll be a link there. These are just some of the offerings. You click and choose. As you click them, it saves it. When you're through, it'll bring up a page. You give us your email address, your name. We'll get things right out to you. It can't be any simpler than that, and it happens within 24 hours. So I think you like what you see. It's all the different programs we have. As you can see, there's quite a bit of them. Take advantage of it. You don't get this from everybody out there, and there's a lot of time and effort we put in this. Hope you liked what you heard. Give us the thumbs up, and I'll see you all tomorrow.